Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Friday morning. I hope you're having a great Friday, great afternoon, evening, whenever you're watching this. But we have the one and only Stephen Dow from Velocity Mortgage on with us today. How you doing, sir?
Oh man, fantastic! Super excited.
Awesome, man.
Yeah.
Well, let's do that marketing spill. Get that out of the way because we're going to talk about rates here in a minute. Get that marketing thing done.
Okay, thank you for remembering. Again, although I work happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel are that of my own. And let's get it cracking. Let me close the office doors because I'm getting like a hard boom.
Okay, cool. Yeah, folks, while he does that, how I'm going to set this up is the Fed obviously met Tuesday and Wednesday. Jerome Powell came out Wednesday afternoon and basically said, we're going to start the taper. We're going to be done by March. And oh, by the way, it's very likely we might have 3 rate rises next year. That was the median expectation. So, Stephen, what I want to do is I want to talk about just residential lending, right? The average person that go get 10 loans, maybe they're doing owner-occ purchase or refi. Right. Again, this is not neither of our job is residential. That's Matt, the mortgage guy. But I thought we'd just talk in general, right? So, Stephen, in general,
right?
If the Fed is going to start raising rates next year, and let's just say they go up 3 times, is it fair to assume that the 30-year fixed rate mortgage will also go up? Is that a fair assumption?
I mean, historically, data based. I mean, it's gonna happen.
Yeah.
Not if, just when. Mm-hmm. So yes, it's definitely very fair to say that it's gonna happen at some time.
Yeah, because when you look at the 30-year Treasury, again, it's no direct correlation, meaning 1-to-1, but you can watch the 10-year Treasury, which is something I watch. Which, oh, by the way, has been down the last 2 days because
I know.
The stock market is nuts. So people are afraid.
Right.
Yeah, but what's really going on is eventually the 10-year will flatten, will stabilize, and as the Fed raises in March or May, you will see the 10-year go up, and then you will see, the 30-year mortgage go up. Now it may not go up as much because again, what you will have is the 30-year mortgage rate is based on what they can borrow capital from the Fed.
Exactly.
And then on top of that is something that is called margin.
Right.
So maybe their margin today is 1.5 points. Because again, they got to pay for overhead, they got to pay for the employees, they got to pay for the building. And oh, by the way, they got to make some money.
Right.
So maybe as rates go up, they could collapse that. They could. Some may grow it if they get nervous. So again, these are all things to watch. But generally speaking, if the Fed raises rates, you will see a rate rise in the 30-year mortgage. Fair?
Fair.
Yeah.
I mean, it is been in this business for a long time. And
generally speaking,
yeah, it's going to happen,
Yeah.
So
the other thing, Stephen, I think is interesting is most people who don't do the work like I do, they go, hey, when rates rise, real estate crashes.
No.
Now, historically speaking, that's not true. And what I would tell you actually, as if rates rise a la 2018 and like spike 0.5 point in a week, that'll freeze a market.
Right.
But what we are going through is just this little dance up of, it's up 0.01, up 0.02, right? These little 100 basis point moves. And actually what happens is mom and dad get off their ass, get off the sidelines and write the offer. Because right now there are a lot of people that are just like ho-humming it. And yeah, we've been taking the winter off because it's the holidays. What will happen is you will see a lot of people rush off the sidelines because they don't want to miss out on low rates. Every time rates go up, their payments go up for 30 years. So historically speaking, as rates move up or start to move up, right, there's an inflection point. It actually pulls demand off the sidelines. It's a weird thing that's kind of counterintuitive to a lot of people.
Well, again, I think people try to time the bottom, but you just can't really. Yeah. So when you start to see signs of just slowly ticking up, that just to signal you, if you're on the fence about something and you don't know, well, you better hurry up because you need to get off that fence. Otherwise, you might miss that opportunity. You may not have gotten the bottom, but you're still at the low part before you get past that part where it's just not profitable anymore. So again, I think it's, like you said, psychological, but also financial in a sense. Well, hey, I tried to time it just to see if I can get any lower. Oh, it's not getting lower. Let's get it.
Go.
It makes sense. Yeah. It makes sense.
Yeah. I mean, I always talk about what we're doing. You and I did a deal, 2 deals,
right?
Like 40, I think we closed like 45 days ago, maybe 60, but I told you
it was over that for sure. It was sometime. Yeah.
But what I told you in that interview, and again, I always share with the audience what I'm doing. The reason I was doing this is I expected what the Fed did last week or this week, rates to go up. So I wanted to lock in. You were able to get me a 399 on a purchase,
Yep.
30-year fixed. And I think it was 4.5 on a commercial cash out
Right.
refi. Yeah.
Right.
So again, commercial office
30
building, 30-year
Right.
fixed, cash out. You sent me some money. I thank you for that. And again, it's the reason I did that is because I expected rates to go up. So I wanted to stash away a little cash so that when the slowdown happens, I'm able to deploy. So,
well, and again, not to take away from Matt the mortgage guy as well, as far as any type of business, since you brought up the conventional side and multifamily, I've had a lot of interest coming from the commercial side that understood the ease of use, one, because they were introduced to a pretty aggressive rate, and it seemed attractive at the time until they had to go through the hoops, until they had to go, and then they started crunching the numbers, and it was like, it's not that bad, you know, and mine's fixed for 30 years. And so they've actually transitioned just based upon their initial experience with a different property, but just the process itself. And they said, you know, you're so much easier. Let's just throw it over there.
Yeah. So, I would tell people, and again, I've done it, right? I don't talk about what I haven't done. And actually, it's funny. Matt, the lumberjack landlord, and I did a conversation, I think it was 2 weeks ago on his channel.
Right.
Again, kind of comparing a bank or a commercial loan, which is 25-year, not 30, 5-year arm, not 30-year fixed. And the payments were within a whisper of each other. It's like, dude, do you what it really comes down to is, do you want that 5-year interest rate risk? Are you freaking nuts?
Right.
No chance. If I had all my commercial loans are now 30-year fixed.
Right.
Because I don't want that, right? Commercial loans, people don't know this. They're 3, 5, or 7. Unless you're the big boys, you go get agency debt for 30 years. I'm nowhere close to that.
Right.
So that's why I go to a non-cum lender. That's why I went to you to get that 30-year money. So yeah, anybody doing office, apartments, 5 units and above, mixed use, go get 30-year money.
Automotive repair,
anything.
We can do retail. There's a lot of things that, you know, just nothing too specialized, unfortunately, you know, in the way of car washes, movie theaters, but
call.
Just general.
Yeah, call. At least ask the question, right? If I was doing a deal, or if I was looking for, here's something I want to close this episode with. If you are looking in the commercial space, you're just looking.
Right.
As you will see in my course, one of the things you should do besides a buy box and doing the yield, and you should be growing your network. So I want to challenge my audience today. If you are looking at commercial properties anywhere in the United States, I want you to send an email, or I want you to text. I guess email is the right way first.
Right.
I want you to email Stephen Dow today, just to set up a quick 10-minute call to tell him what you're doing, so you have it in your back pocket. Right. Maybe he will tell you he can't help you. Maybe it's too small. Maybe it's owner occ. Maybe it's ground up. Maybe it's something they don't do, which is an answer, right? What I don't want Stephen to do is maybe. It's either yes or no. So again, Stephen, how do you want them to reach out and start this process?
That's going to be SDAO, DAO at Velocity, the word mortgage spelled out, mortgage.com. And please put in the subject line ORAAT, which stands for one rental at a time. That'll pass the firewall. Nice. And then from there, best phone number to reach you at. And then maybe a quick breakdown of what it is, property type, as far as mixed use multifamily or straight commercial, purchase refi, desired loan amount, you know, estimated value, purchase price, mid FICO score, address, if possible. If not that, at least the city and state, but address is more important. And other than that, I'll be able to kind of structure the best possible deal given the circumstances. And again, these are true stated income loans. So the ease of use, you know, right from one is going to be night and day. So no tax return, no pay stub, no W-2, minimum 25%, maybe sometimes 20% down, just depends on scenario and case by case. Just kind of give them a range.
Brand new LLCs are fine.
All fine. No, you can hold title as an entity or as an individual. There's a lot of flexibility versus commercial that they'll be able to see the differences. Closing typically under 35 days on the commercial side. So right now, though, I mean, holidays, we're smack dab in the middle of Christmas, and it's gonna
might be a little longer.
Right, but generally about 35 days on the commercial side. So ease of use, multiple, you know, loans to one borrower. So
portfolio loans.
Yes, as far as multiple properties, things of that nature. So give me a call or email me, at least give it a shot. And
again, the reason Stephen Dow from Velocity Mortgage has been on the channel is, for me, the reason is the service, right? Because I've been through it. I've done 2 deals, one purchase, one refi, but also that 30-year money on apartments for me. Actually, the office, like I have an office building in Fresno called the Hub. He
Right.
gave me 30-year money on it. So it's I'm very happy. I'm very happy. All right, Stephen,
Well,
man. Thank you.
thank you. Have a good day.
Mhm.